when you look stronger and get stronger in terms of this tech trade. I mean, we just came back from Asia, demand 15-1 for Nvidia when it comes to next gen chips. That's not changing. So the point is that I think when you're able to kind of go through periods like this, and I get that there's a lot of uncertainty, but just as we navigated tariffs in 18 and 19, and just like we've navigated other macro issues, that's our view. It is the time to own the winners. You look at these names like an Nvidia, you look at names like Palantir, you look what I believe Apple, which is obviously holding up very strong, and a lot of the other Mag 7, Microsoft, Alphabet, and others.
So, Dan, is this very much more so driven by macro concerns rather than sector-specific concerns?
I think 70% macro. I mean, the worry is like you just don't know rules of the game. So you don't know when you wake up, whether it's US or Asia, what's coming out of the 202 area code. Retaliatory, what does it mean? It adds uncertainty. And obviously, like in the risk on environment, you've seen risk off, you see what happens in the 10-year, and now you're seeing growth investors just get more and more concerned. But when it comes to tech, even on some of the knee jerks like a Marvell or Mongo and others, take a step back. Like the AI trade and the strength is just going to continue to accelerate.
Dan, are those gains, though, capped until we get some more clarity on the macro front when it comes, especially here, to tariffs?
Yeah, I think it's range bound. I wouldn't necessarily say I'd say it's range bound, but it does speak to our view that like, this is all a game of high stakes poker. If you think tariffs are going to continue and you start the trajectory out of when it lasts through 2026, then all bets are off. But as we all know, I mean, this is all a game that ultimately is about negotiations. That's how Trump goes about it. And my view is being in DC, called 3-4 weeks ago, and even being in Asia, my sense is like cooler heads prevail, and you're going to get to deals. And I think a lot of this is ultimately going to be bark worse than bite, but it's nervous, and that's creating this sort of angst and white knuckle period that we're seeing.
Dan, I'm curious, how would you assess, or what is your assessment so far of the tech industry's approach here to the Trump administration? There's a report out this morning that tech leaders are going to be meeting once again with Trump's administration next week. What do the next several years look like here under this administration?
Look, it's embracing, right? I mean, much different than sort of arm's length and almost much more of a negative view in terms of first administration. Okay, then there's a few things. One, for the first time in 30 years, tech's leading, in U.S. versus China, because of AI, because of the trade, because of Nvidia, because of ultimately what we've seen in terms of the AI revolution really being a U.S. story, right? Even when it comes to DeepSeek, obviously the Singapore story and everything else, you realize like that was a lot different than maybe what initially thought. When it comes to Europe, I think there's a view like they're done with the big brothers watching. Like they want U.S. to have much more strong arm tactics in terms of some of the frustration that tech companies have faced. So I do think it's much more of an embracing of the Beltway and Trump administration, especially relative to what we saw in Trump first administration.
Dan, let's talk about what is going on on a global scale, because you have Alibaba launching potentially this DeepSeek rival. That's obviously causing some ripple effects here in the markets this morning. I'm curious, is it a threat to U.S.'s AI dominance?
See, I don't view it as a threat just because it always goes back to DeepSeek, 6 million not using next-gen NVIDIA hardware. I mean, that the same chances that I'm playing in the NBA this week, right? So the reality is that Baba, we're bullish on Baba. And I don't view it as necessarily a competitive threat because it's just a matter of time until Apple and Alibaba partner. And ultimately, Baba is going to be Apple's partner when it comes to AI in China. Innovation is going to continue to increase more and more. These models, more enterprise going down the path, whether it's China or US. Export controls will be there, but the reality is there's only one chip in the world that's fueling AI revolution. It's godfather of AI, Jensen Nvidia.
Dan, outside of the Mag 7, outside of names like Nvidia, what do you like?
I think it's in software. I think you look at name of Messi of AI, Palantir, you look at Salesforce.com. I think Mongo is selling off like this is a huge opportunity. Look at names like Snowflake. I think more and more software on the use cases is going to be the ones that benefit. And again, I think we're going to look at this as a growth scare, but not something that dramatically changes our view of the trajectory where tech's going next few years.
In a remarkable twist, Nvidia is once again stealing the limelight in the tech world. With its stock riding a nearly 7% wave in midday trading on March 12th, anticipation builds around its upcoming GTC conference set to start on March 17th. But why the buzz? While Nvidia has faced recent pressure due to tariff uncertainties and fears of a looming recession, analysts suggest that next week's conference could be the game-changer everyone's been waiting for. Renowned figures like Wedbush analyst Dan Ives are holding on to the belief that this event will redirect focus from economic apprehensions back to the AI revolution. But what exactly does Nvidia have in store? Only time will tell as details slowly unfurl in tech circles. Welcome back, everyone, to Investocracy.
One of your next guests says the markets will find their footing before April 2nd, when the reciprocal tariffs, at least for now, are set to take effect. Joining us now for more is Tom Lee. He is the head of research and founder of Fundstrat, also a CNBC contributor. Also joining us, Nancy Tangler, Laffer Tangler Investments CIO and CEO. Tom, listen, I understand it's a different White House. Every day we get a market-moving headline. A lot of people, I think, honestly, I'm just going to say it, they don't want to be neutral. They don't want to be data-driven. They want to be angry. I get that. But history says that markets will recover, right?
Yes, they've recovered every time. One thing we have to keep in mind is when markets fall this quickly from a 52-week high. I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think two other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the U.S. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
And that was only, Nancy, nuclear holocaust. I mean, that literally was, we're going to break the world in half with ICBMs. I mean, that was, compared to tariff worries and a slowdown in the economy because we might slap something on European wine or steel, seems very small now. That said, again, and I'm not saying the markets are going to recover next week. I don't know. We're talking about history, and I don't like to bring up politics, Nancy. It always makes me feel like I need a shower, but I will ask you this. How much of this correction that we are seeing do you think, 100%, 50%, 0%, is political, is man-made, is tariff-made?
It's funny you asked that, Brian. It's good to see you. If you look at the consumer sentiment numbers today, and I commend everyone to read Kelly's piece that she wrote this morning, but if you look at behind it by political party, what you see is that Democratic sentiment has not been this low, especially on expectations, ever. And so if you look sentiment overall by party, Democrats down from 91.4 all the way down to 41.4, while independents and Republicans are down somewhat but have held up. And then on expectations down from 28.2 down from 93.1 to 28.2. So that's driving some of these sentiment numbers that the market's keying off of. And I would just point out that the bond market is not panicking. And so this notion that we're going to go into recession because the Atlanta Fed GDP now number was revised down, that was driven by imports. They were up 70% in January as purchasing managers trying to get in front of tariffs. So I think just like in 2022, this will all settle.
As tech enthusiasts across the globe fix their eyes on Nvidia, the anticipation surrounding the GTC conference is palpable. The chatter among investors hints that Nvidia could announce innovations that might seem straight out of a tech enthusiast's dream. Analysts, including the bullish Dan Ives, see this as a much-needed pivot toward the AI spending boom poised on the horizon. Ives anticipates tech companies will invest over $2 trillion in AI infrastructure in the next few years, And with Nvidia's shares, which are currently down 23% from their year-to-date high, the potential for recovery is ripe. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Huge sell-off, $1 trillion in value lost off the NASDAQ 100. Just want to get your take. Why yesterday? We've had these tariff concerns. We've had these recession concerns. Didn't seem to be any big economic reports or anything out. Why do you think it happened yesterday?
What's the rules of the game? In other words, from a macro perspective, in terms of tariffs, in terms of China export controls, I think that's really the one that's getting the tech trade nervous. Because when you look at export controls, what does that mean for Nvidia? See chips selling off, AI revolution, a lot of those trades. And I think that, look, I think you're seeing, I believe the nervousness that I'm seeing, I'd compare to maybe some of those days even during COVID, in terms of March 2020. I'd say that level of nervousness, but I believe it's misplaced relative to where I view the fundamental stories playing out in tech.
Yeah, but I mean, have we known about those export controls for a while? I mean, it just seems like Monday, everybody start to believe that all these things were going to happen, tariffs, export controls, and did they just all of a sudden realize that the consumer is also stretched, which hits a number of these names?
Well, I think also maybe like some words about recession, you know, what does that mean for the consumer? Every data point sort of microanalyzed. Look, what I believe, especially in tech, look, valuations clearly are expensive if you don't believe what ultimately growth is going to look like. And I think right now, look, you're going through a gut check period for tech stocks. But I believe this is not the time to hit the exit run for the hills. I think you look at the winners. I think we navigate through, I'll call it an uncomfortable time for growth. And I think that's where the opportunities are.
I just want to be clear really quick. We were talking about the one thing that concerns you. It's the export controls. You think that's kind of the catalyst for some of this downturn. At the same time, I mean, you're known as one of the biggest bulls when it comes to tech on the street. A lot of times, you know, we have a little fun. You're talking about what time it is in the AI party. This is, like you said, a gut check. But I just want to talk to you about the fundamentals. You often talk about we're in a 10-year cycle when it comes to the AI build-out. Do you still believe that that cycle and that story is still intact? Yeah, and look, we're in year 3 of what's essentially going to be an 8 to 10-year build-out. The reason those export controls, it sent such really nerve, you know, throughout the tech trade is that that's something that when it comes to supply chain, when it comes to a lot of the build-out from Nvidia, when it comes to the data center point, but I believe bark's going to be worse than the bite, and this is not the time that in any sense for me, you know, we sort of...
As the countdown to Nvidia's GTC conference begins, investors are left in suspense, pondering the vast potential ahead. Given the forecasts and the unwavering bullish sentiment from analysts like Dan Ives, now might be the opportune moment to consider investing in Nvidia. With a current stock status that hints at a 50% potential upside, the prospects look promising. Wedbush expects Nvidia to showcase transformative innovations at the GTC conference, potentially launching new hardware, platforms, or strategic partnerships. Such moves could unlock significant further upside for its share price. Wall Street analysts remain hopeful, maintaining a strong buy consensus rating on Nvidia stock. A mean target of $177.59 indicates a potential upside of about 52%, and with everyone on board, it feels like a unanimous decision among stock market experts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
GTC event next week. Top chip analyst Stacy Rascon of Bernstein here with what you should expect from that. It's good to see you. Welcome back.
Good to be here.
As you look ahead to next week, just let's look at what happened to this stock of late. I mean, how should investors feel about it, the ones who love it the most?
Yeah, so I think I heard in your prior segment, if you liked it before, you should love it now. I've been a little... I guess maybe surprise is the wrong word, but I mean, I've been a little surprised at the magnitude of the decline. And I get it. The whole AI space has kind of rolled over somewhat on DeepSeek and macro and tariffs and just a broader degrossing. And I get all that. At the same time, Nvidia, I mean, we're right at the beginning of their Blackwell product cycle. It has just started. It is likely to be the biggest product cycle in their history. We'll likely get some more updates on that next week at GTC. We'll probably also get our first look at Rubin, which is the next generation. We may even get a little look at what comes after Rubin. They may talk about co-packaged optics. They may talk about quantum. They may talk about ARM PCs. They'll probably talk about robotics and every physical AI and everything they talked about at CES. I think it still looks really, really good. And at these current valuations, I mean, it went down to 23 times earnings. It's about 25 now. It's at trough valuations. You've been really, really good buying it there, like historically. I think over the last 10 years, if you bought it at 25 times or below, your average one-year return from that moment was like 150%, and it's never had a negative drawdown over a one-year period buying it under those. I really like it at these valuations in the beginning of a product cycle and with their, their conference of the year starting next week. Yeah.
How do we know? How do we know? I guess I'd ask it this way. I'm the investor. I love Nvidia. I believe everything that you said. I'm a huge fan of the stock. I agree with you. It's come down. It was never that expensive. Blah blah blah. The whole story, right? That's gotten the stock to where it is. But the DeepSeek thing changed the way that I think I should think about the future, perhaps for this company. Whether it's just going to change the amount of money that needs to be spent, whether it changes the dynamic of the kind of chips that need to be used. And it's just too early to say that it's not going to have a tremendous impact.
But it's already had an impact. But what impact has it had? It's been a positive impact, not a negative impact. This was my read on We talked about this, I think, during that circus.
I know we did, but has it already had that? Just because Satya Nadella and others like you come out and say, well, it's going to lead to more compute, which leads to more chips and blah, blah, blah. I mean.
But what's happened since then? So we've seen H20 like inventory, like in public cloud, inventory has gone down. H20 rental prices, H100, excuse me, inventory has gone down. H100 rental prices have come up. H20, their China sales, like their sales of their China legal parts into China, there's a ton more demand like on the back of DeepSeek. They need more compute, not less compute. All of the hyperscalers and everybody else has been taking their CapEx numbers up by leaps and bounds this year. Again, I think from your prior segment, what I think came out of some of the conferences in this latest season is that those spending plans are still very, very intact. If anything, we've seen increases in demand, not decreases from and since DeepSeek, and that's been my view. But I thought it was positive. Again, the market clearly disagreed, but I think it was good.
Nvidia, despite recent hurdles, has consistently demonstrated resilience, and its tether to the burgeoning AI industry only strengthens its position. Are you ready to join the ride on this AI revolution, with Nvidia leading the charge? With the excitement building and the stock poised for a potential leap, share your thoughts on where Nvidia could be heading next in the comments below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.